Okay, picking up where we left off. This is sort of the summary of all those transactions. And we see that we have balances for all of these. Now, what I'm going to do is split my screen so that we can see all of these balances, and then you can see how those translate to actual financial statements, okay? Okay, so here we are. Here is the summary page where we left off of all of those transactions, A through F, including buying the land and all that stuff and paying herself dividends. And I want to show you how recording these transactions in this manner actually translates to the financial statements that we discussed in the last module, right? So here we have an income statement on this side. And of course, it just picks up off of this income statement blue page where we've recorded them in the context of this sort of ledger that we've been using to record these transactions. And so, our top line of an income statement is always going to be revenue. And then you categorize the expenses based on, in general, what they are. Add up all of your total operating expenses when they add up to $2,900, which gives you a net income of $2,600, right? So this income statement over here basically is a more formal presentation of this income statement data over on this side, okay? Now, the next thing that you need to do is create the statement of stockholders' equity, which, by the way, is also called the statement of retained earnings. And so sometimes you'll hear me slip. I'll call it one thing or the other. I apologize for that. I know it's not ideal. So we have here our statement of equity, stockholders' equity. And so at the beginning of the period, when she didn't have a business yet, it was zero across the board, then she issued stock for $6,000. She had net income going into her retained earnings account, and then she took out the dividends, right? And so that gives her a total of stock and retained earnings together of $7,100. So that's what a statement of stockholders' equity would look like based on these transactions over here. And I will note that the balance sheet, the income statement, and the cash flow statement are what you would call the three primary financial statements, and they don't bother explicitly pulling out the statement of stockholders' equity here in this sort of transaction analysis framework. But the stockholders' equity statement is the only place that you're going to find dividends. So you need to look at it in order to be able to get your balance sheet to balance. But it's not included over here in our transaction tracking system. Okay? So that's how these transactions transfer into the stockholders' equity statement. And now here we have a balance sheet. And the balance sheet, you can lay out a balance sheet this way, sort of vertically, or it can be laid out horizontally with assets on one side and liabilities and equity on the other side. It doesn't matter. You can see them both ways. You probably see them both ways in the same textbook. So here we have our assets. We have $5,100 in cash at the end of the day. We have land totaling $12,000, and that means that our total assets are $17,100. And we can see that from here, right? This is all just picks up from the balance sheet portion of our transaction entry system, our land here and our total cash here. Okay, we don't have to say every single transaction here. What matters in a balance sheet is a snapshot. So at the end of the day, on September 30th, she's got $5,100 in cash. Doesn't matter on a balance sheet how that cash was derived. And then she's got $12,000 in land, total assets then of $17,100. And then over here we just pick up the balances, right? The balances in the bottom line of each of these other accounts. So we have $10,000 in liabilities, notes payable, $6,000 in common stock. We also add to that our $1,100 in retained earnings. That gives us a total stockholders' equity of $7,100. Total equity and liabilities is $17,100. Total assets is $17,100, and our balance sheet balance and all is well in the world. Believe me, I've spent many a time in my day trying to figure out why my balance sheet wouldn't balance. So it's always a joy when it does. Okay, the last financial statement then is cash flow statements. And so here's our statement of cash flows. And the statement of cash flows divides the flows into operating activities, investing activities, and financing activities. And I want to actually, you know what? I need to address the use of the word net. I've found that a lot of times my financial accounting students and students in this class in 215 don't understand the meaning of the word net in this context. Net means in accounting sort of after you've taken everything out. Right, so net you could also kind of think of it almost like the total. So our net cash flow, or our total cash flow from operating activities, was $2,600 positive, right? We got $5,500 from our customers and, spent $2,900 on our expenses. And so our net cash flow from operating activities was $2,600, which was also, in this case, because it's a cash business, it's the same as our actual income. It won't be for most businesses. Most businesses don't do everything in cash. We'll get to that in chapter 3. Okay, for our cash flows and investing activities, right, we acquired land, so we had a negative cash flow of $12,000. And then our cash flows from financing activities, we had positive $6,000 from the stock, positive $10,000 from the note, and then a negative, right, we took away our dividends from that, so our net cash flows from financing activities at the end of the day are $14,500, right? So we have a positive $2,600, a negative $12,000, and a positive $14,500. And if you add those three up, that will again add up to that $5,100. If it doesn't, you've done something wrong. Okay, all this is like your balance check. This number has to be the same as this number, which has to be the same as what's showing up on your balance sheet. Okay, so that's how these multicolored transaction recording blanks turn into financial statements. Okay, this is where those 3 financial statements come from, 4 financial statements. Okay, this is it for lecture for this chapter. This chapter is just a bunch of practice. Now I've got a practice problem assignment, which doesn't count. It's like the kind of stuff that we would do in class. And then there's an actual quantitative homework assignment, which does count for your grade. Okay, so you should have already started on the practice problems after the last little mini lecture. If you haven't, go ahead and start now. Do all those practice problems, become comfortable with it. You can use the check my work as many times as you need to in Cengage, and then when you're comfortable with it, then go ahead and do the homework. Okay.